The spotlight in today's property show is on luxury real estate. Now, post-pandemic, this somewhat struggling segment got its mojo back. From Virat Kohli and Anushka to several startup founders and industrial families, luxury home purchases have made regular news headlines since 2021. Today on the show, we ask our experts what 2023 may have in store for high-priced homes in India. Ashwin Chadha, President, India Sotheby's International Realty; Surabhi Marwah, partner at EY; Ashwinder Raj Singh, CEO, Residential, Bhartiya Urban. These are our three guests, and all of you a very warm welcome on a very cold winter day in Delhi. Ashwin, let me start with you. India Sotheby's has released its annual survey for luxury housing. Let's kickstart with, have there been any surprise findings for 2023 outlook?
Hi Manisha, thank you for having me on your show. So yes, we at India Sotheby's International Realty, we've just concluded our annual luxury outlook survey for 2023, and we have a diverse range of findings, though many of them do not come as a surprise. The top three findings that we have from our survey are 74% of the wealthy buyers believe real estate is an important asset class to hedge inflation. I can tell you we haven't heard this in years. It's always been financial assets topping the list. I would also like to add that real estate per se is an inflation hedge, just like any other commodity. And with rise in inflation, property prices will rise and give you an upside on your portfolio as well, unlike other financial assets which don't have a predictable correlation with inflation. The second important finding that we have is 61% of our high net worths have affirmed their desire to buy properties in 2023-24. I think that's a huge number which is going to continue to fuel the demand. And that's not it. 34% of the high net worths have bought luxury real estate since April 2021.
Okay, so you're saying that the mood is upbeat, and after a long time, real estate has made a prominent comeback into people's, especially wealthy Indians' portfolio. Surabhi, real estate, whether we like it or not, is also very connected with the mood of what the rich people are feeling. And last year, 2021 is specifically did phenomenally well on stock markets. The wealthy have made a lot of money. Startup founders have sold their equity and, made much capital gains. Going forward, we do have a situation where, things are a lot more cautious and pragmatic. What do you feel? Do you agree with the finding reports that, it's still a good time to buy luxury properties?
So first, you should, we saw Ashwin smile and talk about the results. I think, the mood is very much comes in with his smile. I think in the past, people bought real estate both from a hedging perspective, and also there was a lot of things that were available from a capital gains planning perspective for real estate. All of those things are still very available. People are more aware of them. They're reading more. The surcharge rate on long-term capital gains was fixed at 15% in last year's budget. For real estate, a couple of years ago, the holding period was changed from 3 years to 2 years for long-term capital gains. So in my perspective, and I'm not a real estate, professional per se, but I think when I speak with my clients, both from a tax, a hedging and inflationary perspective, they are definitely looking at real estate as a very major part of their portfolio. So I think it's a win-win from all these angles. So I would agree with the report and the findings, and I wasn't surprised at all.
Okay, so wealthy clients looking at real estate very, very seriously, especially from a tax perspective. And of course, what the report says, interestingly, to create multi-generational wealth. But I'm going to come back to that a little bit later, Ashwinder. I mean, I'm seeing developers all through 2022 acquiring expensive land parcels, whether it's Signature or it's DLF, to launch super luxury projects, isn't it? So give me a developer perspective and what's happening in South India. I mean, whether it's Hyderabad or Pune, independent bungalows by big industrialists are making a lot of splashing news.
So, always a pleasure to be on your show, Manisha. This is something which is very important that you're addressing. The thing is that 22 has been the best year in the last 1 decade. However, luxury has always been a laggard in terms of growth. So in the last 10 years, luxury has been slow. However, if I look at some data, even in South India, the total sales in 21, luxury, which is more than 4 crores, constituted around 6% of the sales. And in 22, it has gone up to around 17, 18, and pan-India might be 20. Land is now getting acquired because this is for the first time in 22 that the supply has been more than demand in the last 10 years. I don't know if the momentum of 22 on the overall home sales will continue in 23. However, because luxury is a far more experienced buyer and it is not the first time buyer and they understand real estate better than the normal first time buyer, they always wait and then proceed. So 23 for me is going to be a much better year for luxury. And I also see that the luxury real estate, we will also see a particular more premium of around 10% that is going to go in when the luxury real estate gets, more impetus. We also see in South India especially that because of the strong dollar, a lot of people are HNIs and ultra HNIs are buying into their second homes. A lot of markets like Coorg and even the metros like Bangalore, Hyderabad are doing well. But I see a lot of NRI interest coming in to some of the places they want to buy and come to India and spend some time there. There is an expectation of capital growth also happening in the luxury real estate. Considering nothing happened in the last 10 years, looks like it is going to be a good year or two for the luxury real estate. Overall for home sales, I don't know whether the trend of 22 will continue into 23. Looking at the overall geopolitical scenario, etc.
Okay. Ashwinder, let's come back to that a little bit later. We're just focusing on luxury right now. Ashwin, give me a sense of, pricing, right? So luxury real estate prices literally went down. In large markets like Mumbai, people actually saw their portfolio melting post demonetization in luxury. And despite that increase, the report is saying that they're still marginally ahead of the peak 2015. So what is the motivation for the wealthy to continue to look for luxury real estate in the coming 16 months or 2 years? Is it going to be price appreciation? Is it lifestyle upgrade? What are some of the key findings?
Manisha, I think it's a host of factors which are going to contribute towards this demand for luxury real estate. We feel that whether it is the India feel good factor, whether it is, the upgrading your lifestyle from a luxury quotient factor perspective, or for that matter, the tax incentives that we get on account of investing in real estate under Section 54 and 54F, and which my colleague Surabhi will be able to, add more value and knowledge to. All these factors, we contribute to the demand. We've seen, the Prime Minister do his presentation at Davos and giving a 2047 India story, which is pegging India as the second largest economy of the world. Not just that, the per capita income going to what a developed country is going to be at, which is, equivalent to a $15,000 number. So I think the medium to long term looks very, very bullish from a real estate perspective.
So India at 100, the EY report, Surabhi, has been very optimistic. In fact, it seems to be India's time under the sun, because there is really everybody in tandem agreeing that India is likely to do very well going forward. Does that give you the confidence that we are at the start of a multi-year bull cycle, as the report finds? Because honestly, the question I'm asking is that, yes, there could be a global recession this year. It could be short-lived, is now what everybody is saying. We may see a pause in real estate as well. But if you take a slightly longer term period, a 5 to 7 year period, are your wealth clients confident that overall India will do well, and therefore real estate as an asset class will do well?
Oh, absolutely. We released the report. You guys have had a look at it, and it's very bullish. I didn't want to talk about it here, but you have brought it up. But I think the mood is bullish from an entire India story perspective. I think why real estate a little bit more, because the risk is slightly lesser than if you just go into stock, as Ashwin said. And Ashwinder brought about multi-generational wealth. That's what everybody is also keen and focused on, with what has happened in the last couple of years. And real estate brings about that long-term, wealth building. It's always going to be there, and a little bit more around more reliance on the local market rather than overseas as well. So I think that's why maybe people are more bullish on real estate now. Also, Ashwin also said tax. Tax is a very big part of, what people think about, because the highest tax rate in India is 42% plus. So, it's very important for people to figure out how to invest, keeping in view that a large part will go to the taxman. And 54F, where you sell a property, but you can reinvest the capital gains or the entire amount and actually get most of your capital gains exempt in a very bona fide manner.
In fact, I'm just looking at the report, and three things, and I'm going to sum up what the experts have said. So lifestyle upgrade remains the key motivation for buying property. So if you can afford it, you're wealthy, then why not flip and get better real estate? Because most wealthy do have multiple real estate in their portfolio, including land. That is what the report finds, that they have commercial real estate, they have land, and they have residential real estate. Capital appreciation is the second most important motivation, and of course, adjusting for tax gains. And 12% of the wealthy also take real estate as a chosen asset class to create multi-generational wealth to pass on to the next of kin.
Absolutely.
So that's how they think. Ashwinder, you said that, look, overall for real estate, the mood might be somber, but for luxury, there is still some cushion available for prices to rise and demand to do well, considering that the supply was very, very constrained by developers because they weren't selling, so they weren't launching. But now Mumbai has a lot of new launches, Bangalore, your market has a lot of new launches, in NCR we are seeing a lot of new launches. So quickly, let's wrap out with price and demand prognosis that developers have.
So one of the things I want to share with you, Manisha, and this is that we also feel that, as you rightly pointed out, the HNIs were investing in residential, commercial and land. We feel that their commercial allocation is now going to move to residential because of the overall global situation. And the prices in the luxury segment now are moving from, which were around 10 to 12,000, there are certain pockets across the top 4 cities which have been mentioned, which I agree, which is NCR, Mumbai, Goa and Bangalore, might move from 10 to 12,000 bracket to 14 to 15,000. So there is a capital appreciation that the HNIs are looking at, and that is why they are going into it. They are looking at a rental yield aspect, which is also important. And third and foremost is stability, because they also feel that the other markets and other investment avenues have become a little more choppy. So the capital appreciation and rental yield and stability are these 3 factors. And we definitely expect a 10 to 12% increase in capital appreciation in the luxury real estate, which is already seen in Mumbai and Bangalore for sure.
Okay.
So I feel that this is going to be a very healthy year for the luxury real estate, especially with allocations moving from a commercial to a residential, which was earlier quite well balanced.
Okay. All right. I'm going to thank all our guests, but also wrap out with some very interesting graphics, which always make for interesting viewing. Anushka Virat Kohli, Pinky Reddy, Jishan Hayat. There's also Neha Bansal of Lenskart. So some of the startup founders, Rahul Bajaj and family, bought 5 ultra luxury sea view apartments. Then there's Akash Educational Services, JC Chaudhary and family who bought not just in 2021 but 2022. Then you had Radhakrishna Damani buying the most expensive real estate in Mumbai. But you know, interestingly, this data from Zapki shows that independent bungalows seem to be the most sought after in Mumbai. Agarwal Holdings 332 crore independent house in Juhu. Ravi and Neil Raheja bought a 255 crore independent house in Juhu. Manoj Modi and family of Reliance Group bought 261 crore worth of mansion in Malabar Hills. So really, wherever they can afford, the really rich want independent spaces. Bengaluru, of course, look at the price difference, how it drops. Nandan Nilekani and family bought a 59 crore independent house. You also had Dinesh P. Talera from Mysore buying in Basant Nagar, again an independent villa, and Rana George buying at 35 crore in Kingfisher Tower. So that's a luxury apartment. Delhi NCR, and I'm going to end there. The idea is to just show you the price difference of independent villas in different markets and how much outpriced Mumbai is, even not just in affordable housing and mid-income housing, but also luxury housing. If you look at Delhi NCR, Akash Chaudhary, as I've mentioned, 137 crore spent in Chanakyapuri. Varun Jaipuria bought a 120 crore independent house in Western Green. Vikram Ahuja bought again a 91 crore independent house in West End. So that's what everybody wants: privacy, green spaces, open spaces, and upscaling their lifestyle. If you've got the money, then just go ahead and buy. When we return, there's much debate on Maharera's mandate that all real estate agents and brokers must now take an exam and get certified to practice their profession. How much will this help the home buyer, and of course also to keep the industry transparent? Stay with us for that discussion.